All right, welcome back to the program. In case you're just joining us now, Kenneth Brai, the head asset management, Commercial Partners Asset Management, is joining me right now from Lagos. Hello, Kenneth, and welcome to the show.
Good morning, Nancy. Thank you for having me.
Now let's
It's a
get
pleasure to be here.
yes. Now let's get started. Kenneth, speak to me from your crystal ball. What has been happening, at least since the result of the last election was declared? What are sentiments of investors right now? We do have a new president now, perhaps just a week old right now. Speak to me about the sentiments of investors.
Okay, thank you very much. So we are coming from a time where investors were sitting on the sidelines. They were sitting on the sidelines because uh, they, for them, there was quite a number of uncertainties regarding their elections, regarding what will happen on the swearing day, and we saw foreign participation drop from the January levels to around about 8% compared to the domestic participation, which was much, much higher. And what we saw in the first trading week within the inauguration by the new president was a resounding pause by local investors. And this they demonstrated their vote of confidence in the rally we saw in the Nigerian stock markets across board. If you the market from the slides earlier, we could see that the market rallied. Week to date, as of last week, was around 5.37%, and it was stocks across board from the financials to oil and gas to the consumer goods. So across board, the president's market-centric policies were greeted with a vote of confidence by investors. So that was what transpired in the week.
For investors, was there a sense of optimism from what Mr. President Bola Ahmed Tinubu mentioned at the Eagle Square last Monday in terms of perhaps interest rates, anti-people, and anti-business? How did you and your colleagues in the asset management space digested that? And what are investors also telling you if there's what kind of sense did they make from the inaugural speech?
So for institutional for institutional investors, even HNIs, which we deal with, what has been happening before now, where investors were on the sidelines. We had some sort of cautious optimism. The policies of which was rolled out in the speech by the president was very reassuring of issues which should have been dealt with before now. The president talked about unifying the exchange rate, uh, taxation. He talked about foreign direct investment. And if you've been following the news, you will know that one of the things that have been keeping the foreign investors on the sideline has been FX restrictions. So people invest, and when it's time to take out their funds, they can't do that. Just about this time last year, Morgan Stanley Capital International did announce that we are going to put Nigeria on the sidelines because, in terms of the index, and this was because FX restrictions was not helping the fate of the foreign direct investors. Also, on the local side, uh, what has been worrying has been the health of the Nigerian economy. For the Eurobonds market, we have seen before now several downgrades. We have seen the December to March, we saw downgrades of the Nigerian sovereign rating. And this was as a result of the crisis, for subsidy issue, which you mentioned. We talked about the the dwindling revenues of government, as well as the huge debt burden. So these were some of the issues which the speech touched on. And for investors, this was a vote of confidence. It was a sign that they were moving gradually from a more restrictive to a market-driven environment. And that was a boost for confidence. And it bodes well for investable assets in Nigeria.
Thank you for speaking about, of course, those ratings agencies like Moody's and Co. At least in the last few months, we saw some of them, or a few of them rather, or one or two really, are downgrading Nigeria's ranking. Do you see, because of Tinubu's assumption right now into office, and perhaps is saying what the markets would like to hear, do you see a change in that in the next few months?
I think the president started first in his first week in office tackling the elephant in the room. That's fuel subsidy. And the second one, which he talked about, was unifying the exchange rate. So if you across the three rating reports, Fitch, Moody's, and S&P, what we see across board was one, the issue of dwindling FX reserves, Nigerians' debt burden, and the issue of fuel subsidies. Those are issues we have been resounding in our rating reports for some time now. Then another issue is the issue of oil theft, because oil production levels have been dropping. And for example, when JP Morgan last year took out Nigerian from its overweight category because we missed out on the gains from the Russian-Ukraine war oil price surge. And you saw today that OPEC has already revised our production quota to around 1.3 from 1.7. So meaning that we have missed out completely. So President Tinubu looked at critical issues. He looked at subsidy. He looked at with the security agencies, which had in meeting, the issue of security, as well as the issue of oil theft. So I feel that these are critical issues which would force a rate reversal in the next rating review cycle by end of this rating agencies.
Okay, let's take a look at private investors and not institutional investors right now. Where should private investors put their money? Because from your own analysis earlier, people were really sitting on the fence. So where should people put their money right now in an environment where there's high inflation, 22.22% as of April, and we don't know, of course, there's a likelihood it will go higher. We shouldn't just even say we don't know, because the handwritings are there on the wall right now with this price adjustment of petrol across the country with a GDP data of 2.31%. Where should investors really keep their money? Also bearing in mind that the stock market has also posted, or at least companies listed on the exchange have posted seemingly good earnings. Some are also paying, some paid or are still in the process of paying good dividends. So I don't know what you're advising your clients right now. Just talk to me about what you're telling them. Should one still bring in their money?
Yes, I would say that most of the uncertainties are actually out of the way. So investors who have been on the sideline, and this is now the opportunity to pick, especially on the stock market, stocks which have been undervalued for some time. If you look at Nigerian banks compared to their peers in Southern Africa, you find out that they are trading at a very discounted level. These are opportunities to pick some of these opportunities. We saw only last week, one of the reasons why the banking tickers rallied was because over time they have been undervalued. So banking is a very critical area. Secondly, the oil and gas, from some of the oil majors who benefit from the subsidy, because what it means is that the ceiling on their margins have been reached. So the big time players who have the capacity to import, store the product, and the logistics of move the products across the country are the ones who will benefit. So this, and then when you look at the consumer goods sectors, maybe will be constrained by the drop in disposable income of their customers in the short term. But in the long term, we see some cost savings for them in terms of the sourcing raw materials for their production, especially those who are importing, because of there will be more exchange rates will be more available for them to import. These are some of the areas which we have been talking to investors on. Aside from we'll be looking at Eurobonds, the opportunities also for Nigerian sovereigns.
Okay, Mr. Brai, I did listen to you. Out of these categories of investment, which one holds the brighter, which one is brighter? Should one go for equities? Should one go for, of course, Eurobonds or even the fixed income market, as it were?
Well, as we always tell clients, usually which kind of investment you came to should be tied to your risk appetite. So it will depend on the client's risk appetite. But for investors who are bullish, I would say any day I will go for the equities market.
Investors who are bullish, I didn't get you. Investors who are bullish, where
For
should they go to?
investors who are bullish, who have a very high risk appetite, I would say should go for investments in the equities market.
Okay, okay. Okay, finally, what's your short, mid, and long-term outlook for Nigeria's investment space? Because I also know that, for example, in Nigeria's stock market, we have more of domestic investors now, at least, you know. But what's your short-term, mid to long-term outlook? Your bullish posture this morning on this show, is it for short-term? Is it for mid-term? Is it for long-term? Speak to me about that.
Okay, thank you. Okay, being bullish, I would say my outlook so far is one of, or our outlook is one of cautious optimism. We are optimistic about the long term. We see that there will be challenges in the short term because one, implementing all these policies will take some sort of pain. And that's what we are seeing with the domino effect of the oil subsidy removal. That would, inflationary pressures would go through the roof in the interim before we start seeing some gains. Then we know that the administration is at the formative stage. We need to see the cabinets going forward. That would tell us what the kind of personnel the president is bringing on board to drive the economic agenda. And this would further will take us to the midterm where we will have more confidence. So when we see if it's a more technocrat-driven cabinet, we know that they will have a higher chance of the policies which the presidents have talked about, how to attract foreign direct investments, how to solve the problem of define the exchange rate, how to look at interest rates. These are the critical areas which would now translate into our long-term outlook. But in the short term, we see some challenges. In the midterm, we see some, depending on the cabinet of the president, we see some hope, while we are bullish in the long term.
Okay, final question for you. Has it been difficult for you, what I mean for you, for your firm, also for your colleagues in the asset management space, to be able to gather liquidity from investors? Do you see that as a challenge moving forward? That, of course, there's higher inflation now. Petrol subsidy it's seemingly off. We're paying higher, triple prices right now for petrol. How difficult is it for you in your space right now to convince people to invest? Because people will say, we don't even have enough money for disposable funds, let alone investing. How be it that investing is also necessary?
Okay, like I said in my intro speak, for HNI investors, they are likely been sitting on the sidelines. They have been looking at how the event is leading to the inauguration will play out. We have crossed that step down. So we just started bouncing ideas across them just last week. For retail investors, which we have several products which deal in that space. That's where we feel that in the interim, the reduction in their disposable income would impact our ability to draw investments from them. I was listening to your show over last week. You were talking about how much you have to pay for petrol. I feel that every conversations are coming across the country. Everybody's looking at how the welfare subsidy has impacted their income, and that we are facing that further. We'll now look at how much they have on it. So we see that in the interview.
All right, thank you very much, Mr. Brai. Thank you. I know the same way I said on the show last week. I didn't know you were listening. That I spent, in fact, the money I spent to fill up my tank was triple, and you can imagine it's the same story for everyone. But thank you very much for joining us today. Let's talk again soon. I wish you a lovely week.
And you too. Thank you for having me.
All right.